right, good morning, everybody. Today is April 13th, 2022, and I'm back with another edition of the Wednesday live show. And lots of stuff going on. Let's see, the producer price index came out this morning at like something crazy, 11.5%, I believe. And of course, since last week, I believe it was on Monday, the CPI, Consumer Price Index, came out at a whopping 8.5%, which, well, they say it's the highest inflation in 40 years. And I'm sure everybody's well aware of that. And the funny thing, I touched on a lot of this last week. Did a long show last week, talked about a lot of macro stuff, but basically, I looked back through some old stuff earlier in the week, and last year, literally a year ago, right about a year ago, um, there was no inflation hardly, or actually the official numbers were pretty tame, and um, so I mean it just really took hold quick, and now everyone's freaking out, and so you know. I mean, if you just go back a year, nobody was expecting the type of inflation that we've seen lately. And the thing of it is, it's going to throw a monkey wrench into the market at some point because the Fed is talking super aggressive, right? And so we're kind of in a mess. The macro picture is kind of a mess, and we're getting right into earnings season right here. As a matter of fact, J.P. Morgan came out with earnings this morning, and it's down. Uh, the market's been acting sort of crazy, but we all know that. But speaking of, speaking of a lot of things, first thing I want to look at was this. Last week on the show, as you'll recall, we were looking at this particular chart, and I was pointing out the MACD was somewhere over here, right? The MACD was starting to look like it was going to converge to the downside, and lo and behold, here we are. Now, quite frankly, like this little falling channel patterns actually, potentially it's setting up for a rally, right? Interestingly enough, you can see that the today's action, the S&P is like sort of just trapped right under the 50-day moving average, but um, it's all's not lost, obviously. But interestingly enough, from this low to this high. Like this rally kind of came out of nowhere, right? The market was having this big sell off and sort of, retesting these lows, and then we got this rally kind of out of nowhere that carried a lot further, I think, than anybody expected, right? It wasn't really a great swing trade setup. It wasn't really a great swing trade setup for most stocks. Most stocks were tanking, and then they had a couple of green days and then just took off straight up. And so it wasn't really a V bottom. I mean, you can look at the index here and see kind of a double bottom, but in the W pattern, of course. But anyway, the idea is that more recently, what we're looking at is a little bit of a down cycle here. And as of yesterday, literally, I drew a fib on the chart yesterday, and it just touched the 50% retracement right around yesterday's low. So it'll be interesting to see what happens today. The market's actually kind of oversold a little bit here. Um, Pretty severe pullback in a lot of stocks. That chart, I just have that particular chart because I've got that MACD on it. So let me go to my normal chart here. This normal chart. Yeah, it's a lot easier to see, I think, anyway. So, and of course, last week we talked about this trend line. That's the overhead resistance line. And so, hey, until and unless the market can break above this overhead resistance line, it's not going anywhere, right? And it's kind of been just like that rally just kind of went straight up out of nowhere, this sell-off is pretty steep. So we see a lot of that lately. See a lot of like really sort of kind of crazy moves out of nowhere. And of course, the news is the news cycle is crazy these days. But so you can see the 50-day moving average here, the 200-day moving average here, and it looks to me like there's some support. Right now like 4,400 is like the over under, right? So it looks to be some support here from, back around the middle of this W, this area over here. There's some support around 4,400 and the speed at which we kind of sold off here. But, keep in mind that the other day, I forget which day it was. It might have been on Monday. One of the Fed speakers these Fed officials, like, seems like every single day at least one or two of them has something to say, and they've been extremely hawkish recently. And so I believe it was Monday, Lyle Brainerd, I think it was, sort of torpedoed the market with extremely hawkish Fed speak. Right? So anyway, today's open was slightly. I was watching the futures last night, and they were rallying significantly, and I think it was up like 0.5% when I went to bed, and then I got up this morning to see them like back towards yesterday's lows, which was kind of interesting. But typically, um, typically, typically, after a sell-off, you want to see a significant gap down and then you rally up. So we could rally up today. I'm not sure. I'm not sure at this point this 50-day moving average means a whole lot, but here's the death cross over here, which happened right around the lows, and I think I might have mentioned this last week. Whenever I see a death cross and the market's like kind of which usually happens, the market's kind of extended below it. Um, it's just funny because generally speaking, stocks and or the market tend to rally up towards the underside of it rather than selling off from where the death cross happened. So it's just one of those weird things. But anyway, market's kind of in a precarious spot right here where, we're just sort of in the middle of a little down cycle here is basically what's happening. And so, one of two things can happen. We can sort of continue to drift down and give back 61.8% of this rally. See, this rally here, I know it caught everyone off guard because the way it sort of ground down and hung around these lows and the news was all really bad. And then all of a sudden, it kind of rallied for a couple days. And then the rest of this, and especially this move over 4,600 here. See, I was playing around with yesterday, drawing some lines on the chart. I'm not going to draw it here because it's pretty easy to see. You can see these highs back here in February. We're right up at 4,600. So if you just draw a straight line over there, this market rallied, and then that break over 4,600, I think that a lot of this was just a short squeeze, and so we actually had a higher high here, right? But anyway, right now this is the sort of the primary downward sloping trend line. And the Nasdaq 100 at least it looks a lot nastier. It really does. I saw a couple people that said that this is shaping up to be like an inverse Head and Shoulders, which very well could be, but I mean you need to break above this high here, break above these highs around 370 on this to confirm that. It's hard to imagine. So the interesting thing about the Nasdaq is that 200-day moving average is blue line. The way it broke below that, tested it from underneath here and failed, and has just recently, tried to retest it from underneath and failed. And so everything's kind of, the market's kind of, or the Nasdaq, I should say, is right on the fence here, right? Because now it's sort of pulled back and is retesting the area where it bounced last time. So it's going to be interesting to see what happens. The semiconductors have been getting whacked, which is kind of interesting because they're typically the bellwether for the overall market, really, right? The long as I can remember, the semiconductors have been sort of something that everybody watches and you can see that they're hitting new lows here, right? And so you look around at some of the biggies here. AMD just broke 100, which is a clear line in the sand. I mean, going all the way back to the beginning of 2021, you can see that that $100 is a super important level here on AMD, and broke below. It doesn't mean that it's not extremely oversold and could bounce a little bit, but it's that's a pretty nasty looking chart. The fact that it broke those lows, unlike the indexes, which had that rally and pulled back about halfway. I mean, the semiconductors are really looking nasty here, and so that's to me that's a warning sign, caution flag. Interesting thing about Nvidia, it's holding these lows here, right? And I mean, if you think about it, these lows that you're seeing down here is where I mean, the market was really selling off hard, right? And I believe the Nasdaq went into, you know, correction. It was down almost 20%, right around 20% at the lows. And anyway, it's gonna be interesting to see what happens. I saw this morning where some some Wall Street firm upgraded Nvidia they upgraded it with a price target of 280, which I thought was hilarious because that's where it was, 10 days ago, right? To come out and, it sells off like this and to upgrade the stock with the price target of where it was literally 2, 4, 6, 8, 9, 8, 9 days ago seems kind of crazy, but it is what it is. So yeah, I mean, semiconductors in general looking pretty rough. Intel, Intel's got kind of a clear downtrend going on here. So the thing that really, the transport, whoops, IYT, yeah, the transports, the old Dow theory. Now this is the ETF for the transports, but when I look at this recent sell-off here to below the lows. So, and actually, like, these lows that we saw last week anyway, go all the way back to, when is that? Yeah. I mean, go all the way back to like March of over a year. So that's and the other thing is the fact that this sell-off happened in just a few days. So I look at the transport's looking pretty nasty here. There's which FedEx looking a little bit rough here. I mean, the sell-off was just extraordinary in the manner and the speed in which it went straight down for 6, 7 days. UPS, same sort of thing. The airlines are rallying today. I think Delta came out with either good earnings or good news or something like that, but they had the Delta CEO on CNBC this morning. So airlines could maybe rally. I looked at all the airline charts, and I mean they're still in downtrends. Although, well, let's just look at it real quick. Delta Airlines, yeah, big rally this morning. I don't remember if that was earnings or if it was just some good news or whatever, but here's the thing. They sold down really hard, and now they've kind of bounced in the context of a larger term downtrend. So there's so many charts out here that look like this. Let me just go ahead and might as well just put a trend line on this thing, but it's kind of like the overall market, right? Um, kind of like the overall market. There's just a big sort of zigzagging around, but there's a major overhead trend line, and this has got a ways to go to break it. And then, of course, if it did break that trend line, tons of overhead resistance right there too. So that's kind of yeah, that's kind of where the market is. I mean, the market itself is and I hadn't looked at the Russell yet. Whoops. What am I trying to do here? I'm trying to fix the chart. There we go. I miss the old days when I used to be able to use those free stock charts and everything just worked great. So here we go. Here's the Russell 2000. Somewhere in my list here. Here we go. This is probably it. There we go. That's the chart I was looking for. I had that range. I mean, look at the range. It was from February 2021 to February 2022, really. Like this is, a whole year, and I extended it a little bit, but basically it was trading in this big giant range, false breakout back in here, break down, retesting the underside of it, and so I hate to do this, but these charts, these charts are, there we go. Yeah, it's hard to know where to draw the underside of that box, but I actually kind of like to use this low right here. Yeah, it gives a pretty good picture of it right there. So there we go. All right, let me fix the chart again. See, it's the when you use the drawing tool on these charts, it expands the thing, and just a little kind of wacky. But anyway, yeah, I mean this is kind of a mess, and you know now I don't want to do this, but I could almost draw a bear flag on this too, right? Draw an uptrend line kind of across these lows and a parallel line across these highs, and you got kind of a bear flag. So if this breaks down, then look out. But yeah, the Russell 2000 is not looking so hot. And so obviously everyone knows that the large caps seem to be where, and they have been for a long time, holding up the indexes, right? Obviously. So, I mean, you look at something like, speaking of ARK, Kathy Woods was on CNBC yesterday, and there's a lot of tech stocks that have a pattern like this, right? They had big sell-offs, and then just recently they had pretty significant bounces, and then now they're sort of in this little down cycle, and so ARK's the same way. But what a disaster! And a lot of people I see are talking about how I believe Kathy, she came out a while. Kathy Wood, that runs ARK, came out a few months ago and said that she expects 40% compound returns over the next 5 years for this ETF. And she came out yesterday and like revised that to doubled down. She said 50% returns for this for the next 5 years, and people are all up in arms about that. But anyhow, it is what it is, and this is a pretty good picture of what a lot of tech stocks and or high growth, high multiple, sort of the stocks that were just like ripping higher. I mean, obviously you can see what this did off the pandemic low, just an extraordinary rally there. But stocks like you got like Zoom, right? Look at Zoom during the pandemic, just went crazy. I mean, look at that. That's probably like around $50 to 500, almost $600. So just insanity. I mean, that's like dot-com bubble stuff there. And then you can obviously see the aftermath here, right? So, I mean, it's got a similar pattern to ARK, but anyway, so much damage out there. The problem with something like this is, and I've been around long enough I've been around long enough to know that, stocks like this, they don't come back. Um, they just don't come back. I mean, for this thing to go from, 100 back to 500, I suppose it's possible, and there could be some of these type of stocks that come back, but I just don't think that they are. I don't think that a lot of them are going to see the highs. So this one, for whatever reason, I always think of when I talk about like, this sort of thing. I always think of this Teladoc, and the reason is because, this one actually kind of makes a lot of sense fundamentally, and I saw a lot of people di- discussing the fact that how telemedicine, right? Meeting with your doctor, on your computer screen as opposed to going into the office and how that could save time and all this and that. And so, I mean, and I've heard, great fundamental arguments for this particular stock, which is, in a similar sort of thing, right? A similar sort of thing to Zoom and the growth stocks and tech stocks. But anyway, as you can see here, no matter how good the fundamental story is, that doesn't necessarily mean that that this can't happen. I've seen it over the years so many times, this sort of thing. And once these things break, hey, it's you have to wonder if it can ever get back to the prior highs. And it could take years and years and years and years and never go back, right? I saw something the other day about Kramer's portfolio back in the dot-com days, and like almost all the stocks there are, they were snapped up or they're non-existent or they were down like 80 to 90% and never recovered. And so, we're going to run across the same sort of thing this time around. This is the Chinese stocks ETF, right? The KWEB, which was, well, hang on a sec. Somehow or other my chart got skewed. I need to have the date line on here so you can see it. So I mean, look at this. Going back to 2019, right? Kind of, and Chinese internet stocks, they were hot off of the pandemic lows, and just look at I drew this on here. I drew this on here before it ever even broke down here, and honestly I can't even believe this shakeout down to 20 bucks. But this same sort of thing. The thing about sell-offs like this is that every little rally along, like, it sells down, and every little rally along the way, um, and even little minute rallies like this, people think, okay, the low's in, right? That's it. The low is in. The low is in. And so I've seen that with the pot stocks too. Got to be really careful about this stuff, right? So this is a tough chart to even point this out on, because it's down so much that it's skewed. But this is just a random example that I remember looking at. So as this thing was sinking over here, last October you got that huge move up, and then this little rally here, and I'm sure a lot of people thought, okay, that's it, this thing's never breaking below 10 bucks. And then, this rally, each one of these rallies, and there's been a couple of them recently, and especially this one in February, you get a rally like that, and I mean, percentage-wise, it's significant, but you think that it's bottomed there, and then it hasn't bottomed, right? And then this most recent rally was, I mean, that was a humongous rally there, and I think there was some legislation or something. I haven't heard much about that lately, but there was some legislation at federal level about legalizing cannabis or something. But anyway, you can see, and hey, maybe this time it has bottomed, but all along this chart here, this is probably one of my favorite examples of looking at the chart and saying, hey, there's probably 10 potential bottoms here, and is this one it? Hey, maybe, but you just got to be careful about that stuff. So anyway, let's see. Just pick a couple random stocks off my watch list. Starbucks, right? Starbucks is struggling, and I guess the idea behind this is pretty rough. You know, always got to get that pandemic sell-off on the chart to get really good perspective, right? And I'll tell you the reason behind that, for one thing, is to see like where was the stock before the pandemic, right? This little area right here, because a lot of the problems, inflation, I mean just a lot of the problems in general, they like the Fed loves to blame the pandemic for the issues that we're seeing now, but they were blaming the pandemic for obviously the created supply chain problems, which caused inflation to spike, which they've been saying is transitory for a year, and eliminated that word, by the way. But anyway, long story short is I like to see where some of these stocks were pre-pandemic, as they say, and you can see that Starbucks really struggling here. The funny thing is, I mean, longer term, I remember when Starbucks IPO'd and why I didn't just buy it at the IPO. I'd probably still be holding it. See, that's the thing. If you've been in this some of these stocks long enough, these kind of pullbacks or whatever just happen, and then you wait long enough and they come back, right? This is nothing compared to what this thing looks like on the monthly chart. So anyway, that's just the way this stuff works. Although, hey, you look at the monthly chart of a lot of stocks. I remember looks like 1992. Yeah, I remember this. I remember the first Starbucks opened. I had never heard of it. Opened in Orlando, around the corner from where I lived. And I remember going to it and thinking, hey, this is great. This is really super cool. And so you can see, but people don't sell stocks like this to have huge gains in because they don't want to pay the capital gains taxes on it. I've talked to a lot of people over the years that have held stocks like blue chip stocks like Microsoft or something like that for 20, 30 years, and no matter what the stock does, they're not going to sell it because of capital gains. So anyhow, okay, so let's see. We have an open trade here in CSV that's been kind of all over the map. Let's take a look at it here. I have my real nice clean chart without any lines on it. um, this is still kind of a nice pattern, I suppose. The biggest sort of issue here is, it's a real kind of well-behaved stock. It's got this really nice W pattern going on, and it triggered us in and made pretty decent little move really quick. But now it's consolidating that move, falling back in here. Quite frankly, draw a downtrend line across the high and low here, and you got a real nice sort of bull channel setting up there. And if you look at this, I mean, this is kind of like a cup and handle pattern. This is a beauty. The only problem, obviously, and I think as of yesterday, it was down like 3%, roughly 3.5%. So, only problem with this is we have a super tight stop on this, right? And that's by design. In this sort of environment, I mean, with the thing of it is, I see so many stocks that just are really fluctuating dramatically. I mean, there's lots of stocks on my watch list here that are, fluctuating by 6, 8, 10% a day, right? A lot of really extremely volatile stocks that, using a 5% stop, roughly 5%, 5, 6% stop in this sort of environment is practically unheard of, but those are the kind of stocks I mean, those are the kind of stocks that the system's looking for because we like stops to be really super tight. So anyway, sort of so far so good, other than we could get knocked out of this thing, on a big sell-off day. But the biggest issue with this is that earnings are coming up on the 20th, and as you know, we have to close this ahead of earnings. So long as we're over here, let's look at a couple other ones on my watch list. This SE is, I don't know. I keep this on my watch list because it was one of the best performers, one of the best performers off of the pandemic lows, right? I mean, look at that move that it made in, 2020 and then again in 2021, and now it's literally like giving back most of that. So I kind of, this is almost like kind of like I watch ARK. It's I won't say it's a bellwether, but it's just one of them, right? And so you can see this recent rally up here brought it up to the 50 day and, still struggling a little bit. Let's see this. Here's another one. Talked about this last week, and I thought I drew this trend line on here, but yeah, we're not really looking for these bottom bouncer type things, but I'll tell you what, in this sort of environment, I'm gonna save that this time. Save that line. In this sort of environment, there's a lot of stocks like this that could potentially rally considerably if the environment turns more favorable, right? And so something about this chart. This when this thing IPO'd, it was, well, I mean, it wasn't too much excitement. There's like the one cool thing about these stock charts are they show that little dot there would be the actual IPO price. So that's what people that got in like pre-IPO, that's what they paid for it. There's quite a few of those IPOs in the last couple of years that really did tremendously, and then they gave it all back and then some. Coinbase is one that I can think of. So there's that little dot right there at about 250. That was the IPO price, and then you can see the very next day it went crazy and then kind of sold back down. But look where it is now, right? And so there's a lot of defenders of these type of stocks that, if you think about it, I mean, typically the typically the people that get the pre-IPO shares are required to hold for, what, 6 months, a year, something like that. So we're approaching like 1 year here, and just ugly. The one that really comes to mind is this Robinhood here, because they made. If you think about it, I mean, I've been watching less and less CNBC lately. I mean, I have it on the TV in my office, but I typically have it on mute because most of the interesting stuff, like right now, I'd probably, if I wasn't doing the show, I'd probably unmute this because Steve Leisman is talking about inflation and the blame game, which is a whole nother story I don't want to get into. But, you know, political type people are blaming Biden. Biden's blaming Putin, which, if you've seen that chart from Zero Hedge, I mean, the inflation really kicked in, way before the Russia invaded Ukraine. But anyway, I think most people that are really tuned in know where the blame lies. The blame lies with the Fed, and the Fed is blaming the pandemic and the supply chain disruptions, right? But um, did they overreact? Probably. But anyway, and it goes back to what I was talking about last week, is that they just basically went nuts. I mean, what was it Kashkari or Powell that was on 60 Minutes saying the Fed has unlimited cash to throw at the market to prevent, whatever. So they're in a tough spot right now. Anyway, what we're talking about here is, so there's the IPO for Robinhood. Uh, it had this crazy spike, and then look at it now. And even more interesting is that, I mean, look at how $10 was defended on this thing multiple times. And then recently it had this huge move or whatever that probably obviously like that one day. I don't even remember what the news was that day. At the time there was obviously news. I just don't remember it, but a lot of people probably thought, okay, here we go. This thing's gonna take off, and then look at it now. So, and it's just this sort of rally off these lows, and that's sort of consistent with what we've seen in the overall market here, right? Is we saw a really quick sort of rally, and then now we're in the process of, fading that down. Quite frankly, like super speculative, short-term trading wise, this is not a bad looking chart because you have, and I don't have volume on here, but if I did, I'm sure you'd see a big volume spike these couple days and a big volume spike here. And I mean, $10 is the obvious place to put a stop on this thing. You probably even have it a little tighter, but this would potentially be worth a trade with a stop way down there at $10, and it's kind of setting up. Back in the old days, you get a setup like this, but this is like way too speculative, and the day-to-day price movements are just too much, and it's too low price for the system. But so anyway, I wanted to look at this GNRC. This thing, this is a and pending trade that was kind of setting up, and yeah, it was kind of setting up. I said was because these last few days here, this week in particular, you can see. Let me see if I can do this. Oh yeah, there you go. Whoop. These charts, I swear they just drive me crazy, but I'm getting a little bit better at them. But here we go. I mean, you can see here where this thing, especially like a view like that, right? I mean, this is a pretty decent, or was a pretty decent swing trade setup, right? Big sell down here, you know, a little bouncing around, and kind of a clear level to form a big sort of cup back up, rally halfway, three-quarters of the way. But anyway, so everything was going along pretty swimmingly, right? Still kind of set up here. Little inverse head and shoulders working right here with some real nice consolidation in this area. Just needed a break above these highs. And then look at that. Oh yeah, it looked like it was about to trigger in right there, right? Like real nice big rally up here to 400 or whatever. But anyway, here's what's transpired just this past, in the past week or so. Um, Amazing, how things change so quickly, right? This went from looking like a really decent setup here to looking like the bottom's falling out. So let me look over here. My Thinkorswim earnings are on 5-4. So earnings on 5-4, which I suppose, let's see. Yeah, so earnings are going to be over here. Um, not really enough time. So not really enough time for this to trigger in. So my guess is that just like the other one, just like Ford. Remember, Ford was pending, and then it broke down through the bottom of the pattern. So this one is literally within, if it loses this day right here, then it's probably just going to drop from the pending. So quite honestly, there's really not enough time for this to rally up to the trigger and then go on and make a move before the earnings come out. We don't want to be holding it over earnings. So, the question becomes this is if it doesn't like break down one more time, if it starts to rally here, potentially it could have a pre-earnings rally and then rally up and rally up over here in earnings and then take off. Like that wouldn't surprise me, right? Like something like this. I mean, this is almost it's a very similar sort of thing. Last April and May, or last April, this thing was chopping around and it sort of took a hit, and then earnings probably came out and it did that. So I don't know. I mean, it's gonna all depend on the next couple of days. But this is extremely close to dropping off of the pending list because it just didn't trigger in. So it was a decent setup for a while there. Speaking of which, it's the same thing that happened with Ford. Ford had a decent little setup back over here, and then it started to look okay back over here, and then this last leg here, like once it broke below these lows, then it was done, and it was off the list. And so, um, yeah, I gotta tell you, it's amazing going through some of these charts, looking for setups that that there just isn't more. But one of the biggest problems, I think, is that there's one of two things happening. Let's just take see, I got some energy stocks on my list here. Let's find one. Let's take like Valero, right? One of the big issues that the market and us as swing traders are facing right now is the fact that like so many stocks are destroyed, and the stocks that are doing well are a lot of the energy and material stocks, which are kind of like right up at the highs, right? So there's no, like over here there was, whoops, what a mess. Charts drive me crazy. So you had really nice swing trade set up right there, right? That was a beauty. This one, wow, I've never actually done that before. I didn't even know you could do that with these. So I suppose you could say that that was actually a pretty decent little setup right there too, right? I mean, this is ideal right here. Big, you know, big up move, real nice long duration consolidation here, and then swing trade setup. um, these kind of V reversals, kind of V bottoms are not ideal. When something tanks like that, you got to be a little suspect. But oftentimes we see lots of V reversals, but this one was a little steeper. Um, this was actually a pretty decent little, sort of set up back in March there, but I'm not sure. Sort of if you just looked at this at the time, it looked pretty darn nasty with those big down bars like that, and so for it to turn around and just rip higher like that. But anyway, what my point was, and that's just a random stock. I mean, let's see, is this, yeah, here's another oil stock I've been looking at. I mean, there's that tons of these energy stocks that are going to theoretically, and some material stocks too. See FCX. There's let's look at XLB, the material. Yeah, so well, this is the spider. It doesn't look the same as a lot of the stocks, but anyway, what my point was is that um, there's a lot of energy and material stocks that could potentially set up, but they're not set up now. So you've got kind of a divergent market. You've got tons of stocks that have been destroyed, and you could potentially, bottom fish on some of those. And then on the other hand, you've got a bunch of stocks that CLR. You got a bunch of stocks like this that are set up, I mean, I'm sorry, not set up. So you can see back over here, we had the right idea, but this we got triggered in prematurely. What a mess, right? Triggered in prematurely, and it took it took a couple more another month for it to actually bottom out and do what we were looking for, really. But that's just that kind of stuff happens. So there's a couple of them. Couple of CMRE, same thing. Look at that. It doesn't have the markings on here, but yeah, I mean, we got this one. I believe we got triggered in like right over here, and then there was that sell-off right there. Look at that. I mean, just a one sort of anomaly. It ended up doing, exactly what we had hoped, but got knocked out prematurely. That happens. So, and there's two examples of it. So anyway, I think my point was that some of these energy stocks, and energy in general, materials and energy, they haven't really set up in a while for a decent sort of swing trade. But that'll be one of the sectors. That'll be one of the sectors that I think will. I've been looking at this at Tyson here. This is on my watch list too. This looked like it was kind of setting up. I mean, nice little sell off in that, and this most recent little move here is it's an odd looking chart, and the fact that it was trading down below that 50-day or whatever. But anyway, there's some potentials coming, but right now with the S&P in this sort of overall pullback that we're seeing right now, that's potentially could set some stocks up. So we'll just have to see. Anyway, so we shall see what happens. I would be really careful here. Um, yeah, I'd be real careful because we pulled back a little bit. See, each one of these bounces seems like it's getting sold, right? And like I pointed out at the beginning of the show here, find that chart again. Yeah, there we go. The last little upcycle just didn't set up properly for swing trade, right? I mean, it looks perfect on the S&P chart. You start rallying, you jump on board or whatever, but most stocks, I mean, they looked really, really nasty, and then all of a sudden just ripped higher for sort of no reason, and then now, we're in like this sort of little down cycle here. So we need some clarity. We need some consolidation. I don't think anybody knows what the market's going to do from here. There's a lot of speculating from day. It seems like it's easier to day trade or to, real quick in and out trades, which is fine. But the longer swing cycles are really, really tough just because of what's going on. And of course, earnings season's kicking off now, which quite frankly, I'm struggling. Oh, here we go. One last thing I wanted to look at with earnings season kicking off. So anyway, this is, here's your chart to keep an eye on. And obviously we're on the downswing right now. And so we need to let this sort of run its course, see what happens. I wanted to look at the financials, right? Financials, kind of like the semiconductors, are a decent bellwether for the overall market. And quite frankly, this is looking kind of nasty, right? I mean, the only positive thing you could say about this is that it zigs and it zags so much that, right now we've had a pretty good zag, and so, it could potentially, turn around and zig again, but that doesn't mean that. So, you've got three lower highs in a row, and so, at some point, if it zigs back up here, there's a lot of potential for yet a fourth lower high. So, and it's hard to figure out like where the support. I guess the support's like kind of right around where it is here. But anyway, the market itself's kind of a mess. Everything's up in the air. So, but I mean, it doesn't mean there won't be plenty of opportunities. It's just got to wait for the proper conditions for swing trades to set up. I did bring some charts, but you can get these over at FinViz, by the way. I was uh, I was talking about inflation earlier, and look at this. This is year to date, right? So the CPI came out on Monday at 8.5%, right? And PPI came out 11%. But I mean, look at some of this stuff. Um, and that's I mean, it's what? It's not even Easter yet. It's middle of April, and these kind of gains here, right? See, think about oil, obviously, is it feeds into everything, and like corn, right? Are you kidding me? So anyway, I don't want to get into this too much, but and then here's 1 year. Look at these gains. So, coffee is up 72%, over the last year. Cotton, orange juice, all this stuff, corn. Um, it's pretty crazy, actually, right? And so, I mean, basically what you're looking at here is just basically commodity inflation, which is no mystery, but those of you that go to the grocery store like I do know what's going on. I swear, every time I go to the grocery store, I see that they've raised the price on certain things, that I buy, that I know the price of, and it's just amazing. I mean, absolutely amazing to see like literally like every couple of weeks I see the prices going up on stuff. The same thing. There's certain items that it's like every time I go to the store, sometimes I go once a week, sometimes twice a week. Sometimes I skip a week, but it's like every time I go, they've raised prices on stuff again and again. And so I start thinking, man, should I stock up on stuff? But anyway, so everybody knows that commodity inflation is out of control and the Fed is going to really have to put the brakes on. So gonna be it's going to be a weird environment. A lot of people are saying stagflation, right? So the big, what in the world? The big debate now is whether inflation has peaked, which is hilarious. I mean, after the CPI came out, that's all everybody talked about. Has inflation peaked? Well, we think inflation has peaked, and there's a lot of people that have been saying that inflation's peaked, for a year. Like every time the CPI number comes out, they say, "Oh, this is probably the peak." And one of these times it will be, but here's the thing, when the rate of inflation peaks, that doesn't mean that the price of all this stuff that went up is coming back down. Right? So, in order for prices to come back down, you're going to have some demand destruction, which is basically a recession, which creates a whole nother thing. So the Fed has really put us in a precarious situation here, and it's not going to be easy to battle inflation and keep the economy humming along. So I don't know what they're going to do, but anyway, that's for another conversation. So hey, thanks for tuning in. Keep your eye out for new pending stocks, and at some point the activity will start to pick up a little bit more. And I will see you back here next week, same time, same place.